Good afternoon. Welcome. My name is Karen Sheely, and I am the Dean of John Carroll's Boler School of Business. On behalf of John Carroll's president, Father Robert Niehoff, I would like to welcome you to another outstanding offering in the Mellen Speaker Series. The Speaker Series is sponsored by the Boler School of Business's Edward J. and Louise E. Mellen Chair in Finance, established at John Carroll in 1984 through a grant from the Mellen Foundation. Edward and Louise Mellen were lifelong residents of Greater Cleveland who shared a commitment to the Cleveland community and its institutions. They believed that their resources came from the community and therefore should return to the community to support its institutions, particularly those related to education and healthcare. Through the Mellens' generous support, we are able to bring to campus chief executive officers of Ohio-headquartered, publicly traded companies to discuss the strategic focus of their companies and the challenges they face. The Boler School strives to provide the best in undergraduate and graduate management education. To this end, our programs combine instruction in cutting-edge business theory with opportunities for students to experience firsthand the application of these theories in practice. The Mellen series is an outstanding example of this approach. In addition, the Boler School recognizes its responsibility as an institution of higher learning to provide opportunities for community lifelong learning, and the Mellen series is a natural vehicle for this purpose. I would like to thank today's speaker, Mr. Stephen D. Newlin, Chairman, President, and Chief Executive Officer of PolyOne Corporation, for his willingness to share his expertise with us today. Now, let me introduce Dr. Leroy Brooks, holder of the Edward J. and Louise E. Mellen Chair in Finance, to introduce our distinguished speaker.
First, a quick comment to the students out there before I start with the introduction. Please stay until after the chairman has finished his presentation. Questions are done, and I want you to especially stay because then I get up and do about a two-minute roundup, and you need to be here for that. So you'll have plenty of time to get to your 6:30 classes, so there should be no problem. They're the paying customers. They come first. Now for the purpose of the series. We're very pleased to have Stephen D. Newlin here as our 52nd Mellen Series presenter. Mr. Stephen D. Newlin, Chairman of the Board of Directors, President and Chief Executive Officer of PolyOne Corporation, had earlier executive positions of Chief Operating Officer and Vice Chairman at Nalco Chemical Company, a manufacturer of specialty chemicals, services, and systems. He joined Ecolab, Inc., a global developer and marketer of cleaning and sanitizing specialty chemicals, as president of its industrial sector in 2003 to 2006, and became chairman, president, and chief executive officer in PolyOne in 2006. Stephen Newlin also holds board of director seats at Black Hills Corporation and Valspar Corporation. A contributing member to the community, Mr. Newlin is a member of the Ohio Business Roundtable and the Greater Cleveland Partnership Board. Mr. Stephen D. Newlin holds a bachelor's degree in civil engineering from South Dakota School of Mines and Technology. He has also completed both the Tuck Executive Program at Dartmouth College and the Harvard Business School's Advanced Management Program. As a recognition of his contribution to his profession, the South Dakota School of Mines and Technology awarded him the Distinguished Alumni Award. The Triangle Fraternity, which is a social and academic fraternity of engineers, architects, and scientists, recognized Stephen as a man of the century, also inducting him into their Wall of Fame. Now, Stephen will tell you about PolyOne Corporation. We're very pleased to have you here as our 52nd Mellen Series speaker. Welcome to John Carroll and Bowler School.
Well, good evening, and thank you very much, Dr. Brooks, for that kind introduction. I'd also like to thank Father Niehoff as well as Dean Schuley for inviting me to participate in this esteemed lecture series. It's a privilege for me, and you know, normally I would begin my remarks with a joke, and I have to tell you, I'm not particularly good at it. But lucky for you, I gave up telling jokes for Lent. So you don't have to endure that with me this evening. So I'll be serious, and when I am serious, I want to tell you about what I think your school is all about in terms of how it's viewed externally for a moment. You are a top-notch university with an outstanding reputation for producing students who are prepared well when you enter the workforce. And we experienced this personally at Poly 1. Over the years, we recruited on your campus, we've employed John Carroll interns, and hired your graduates. And in fact, we employ about 20 Carroll grads at Poly 1 right now, some of whom are over here today. So I hope you get to meet them later on when we have a little more social time. Poly 1 and John Carroll have a strong relationship, and I personally fully expect that to continue in the future. So for that reason, it's an honor and a privilege to be here today to talk to you about a different invitation that I received 5 years ago at Poly 1. You see, there was this global company headquartered in Northeast Ohio that supplies materials for other companies and had a balance sheet that was burdened with debt. Customer and employee attrition was exceedingly high, and the shareholders were displeased. And so the board of directors of Poly 1 invited me to lead the company in changing the culture, the strategy, and the direction of its historically commodity-focused, volume-driven organization. And so I accepted that invitation, and anyone who knew Poly 1 at that time, our analysts from the industry, our investors, customers, and competitors kind of universally agreed that it was a seemingly impossible goal at that time. But I believe we've demonstrated that was indeed possible, and we've transformed Poly 1 into a profoundly different company than it was a few years ago. Our product range has changed. Our portfolio has changed. Our culture, our strategy, our business mix, our financial profile, and certainly our management team have all radically changed from what we were a few years back. And our performance is now both record-setting and industry-leading. Our strategy and our people made the seemingly impossible possible. So I'm really honored and delighted to be with you today and to share Poly 1's turnaround story. Now, for those of you who may not be very familiar with our company, Poly 1 is a premier global innovator, formulator, compounder, and distributor of polymer materials that are found in products people use every day. We're in a business of creating materials that make people's lives better, and I'll give you some examples. We worked with a leading fitness company to create a high-performance running shoe that uniquely adjusts its cushioning to a runner's weight, gait, and the running surface. We have very attractive colors that we produce and appealing textures for consumer products and packaging that can make plastic look like metal, pearls, or wood. And with our formulating expertise, we can also make them feel soft or tacky or smooth, whatever you wish. We make soft touch compounds that are used on the handles of razors, toothbrushes, power tools, or on the caps of pill bottles. And our highly specialized electrically conductive thermoplastic material allows the manufacture of connector cables to transfer data at very, very high rates of speed without losing any signal integrity. We develop casings specifically for photovoltaic panels that resist fire and don't contain any hazardous materials. We created a compound that's used in inkjet printers and ATMs that dissipates the static charge that repels ink from paper. We created a polymer that is very heavy, strong, and radiation resistant. It's just like lead, but it's environmentally friendly, so it's a much safer alternative for use in CT scanners. So you see, our materials can be found in your medicine cabinet, your home, in cutting-edge electronics made by some of the world's leading technology companies like Apple, or they're in the solar panels of your rooftops. Might even be at the local branch of your bank, and certainly found in hospitals. The new Poly 1, as we call it, was created by significantly strengthening our leadership team and instilling a performance-based culture of accountability and a great sense of urgency. And a key ingredient in the success was the critical decision to move away from commoditization and towards specialization. I'm going to spend a lot of time on this in the remarks today. In particular, the growth of our specialty platform reflects significant strides toward building an earnings and cash flow stream that's very distinct from our past results. Historically, PolyOne was deeply dependent on equity income from joint ventures. We didn't control these joint ventures, and these were commodity products that were heavily exposed to cyclical end markets, primarily the new construction of housing and the automotive markets. But because of the operational and strategic improvements made, PolyOne is growing rapidly and establishing new record levels of profitability in each and every one of our business divisions. So I hope today my presentation illustrates the key drivers of our transformational success. Amanda? Before I begin, the lawyers insist that I must remind you that this presentation contains forward-looking statements. Here's a list of the risk factors associated with our forward-looking statements. These risks could cause our results to differ materially from those projected in our forward-looking statements. I will also cite non-GAAP financial measures, and this slide describes our rationale for their use and where you can find reconciliations to the most directly comparable GAAP measures. Let me begin the story. A brief history of PolyOne, I think, will provide some perspective to our story. PolyOne was formed in 2000 by the consolidation of two Ohio-based global publicly traded companies, Geon and M.A. Hanna. Some of you might be aware that Geon was spun off from B.F. Goodrich in the early 90s to focus on vinyl used primarily in housing construction and in auto manufacturing. M.A. Hanna, on the other hand, was a specialty chemicals and polymer company that traced its roots back to the 1880s. Now, this was hailed as a merger of two equals. The move was intended to unite two seemingly complementary businesses to create the world's largest polymer company. But in reality, the Geon management team and culture prevailed over that of M.A. Hanna, and the company became an integrated PVC vinyl compounder that was focused on high volumes of commoditized vinyl compounds. The beginning was pretty difficult, and the company continued to struggle. The balance sheet was in rough shape from an exceptionally heavy debt burden. Necessary cost-cutting actions took a toll on employee morale and customer satisfaction, and shareholders, well, they weren't very satisfied either because they weren't rewarded for their investment. So 5 years into the merger, the board decided to change the direction of the company, and in early 2006, I was recruited to drive the transformation. So with the goals I mentioned earlier in mind, changing the culture, the strategy, and the direction of the company, 15 of 19 corporate officers were replaced. And by the way, 2 of our new corporate officers are John Carroll alums, and they're here with us this evening. So together, our new team began developing and executing a 4-pillar strategy of specialization, globalization, operational, and commercial excellence. And this strategy was designed to transform PolyOne into a specialty company. So let me provide a distillation of our strategy, or as we call it at PolyOne, our 4 pillars. We define specialization as the services, technology, and problem solving that differentiates us through value-creating offerings that extend well beyond the products themselves. And to that end, PolyOne innovates, formulates, compounds, and sells polymer and additive solutions that determine attributes such as color, or texture, or weight, or flexibility, or durability, strength, and any other features that provide competitive advantage for our customers. Globalization takes us into the high-growth markets where our customers are migrating and positions us to uniquely serve key global accounts with consistency anywhere in the world. Operational excellence empowers us to respond to the voice of the customer with a relentless focus on continuous improvement in really essentially everything we do at PolyOne. And finally, commercial excellence. That governs our activities in the marketplace, where we deliver value to our customers by showing them how they can increase their profits and grow. And in assessing our portfolio of businesses, in light of this 4-pillar strategy, we determined that the 3 divisions integral to the transformation were the specialty platform, the distribution business, and performance products and solutions. Those were the 3 that made the most sense to link up with our strategy. Now, on the other hand, we categorized our equity investments in pure commodity-focused companies with cyclical and volatile earnings and limited ability for growth and differentiation as non-core to the PolyOne portfolio. And this was very significant because historically, those equity investments generated the vast majority of the company's operating profits. Consequently, we have systematically monetized non-core assets, the largest being our OxyVinyl's equity investment in the year 2007, and most recently, our Sunbelt joint venture, which was sold earlier this year. As a result of this portfolio repositioning and substantial organic growth, we're now reporting for the first time the best mix of earnings in PolyOne's history. And our 2010 operating income recorded by these three strategic platforms totaled $183 million. That's the highest level in company history. Now, improving the profitability and driving growth of the specialty platform is at the very heart of our transformation story. And I think this slide best illustrates what we mean by the new PolyOne. In 2005, the Sunbelt commodity segment contributed nearly half of our total operating income. And specialty, as you can see here, was a mere 2%. Over the last 5 years, our specialty operating income has grown by 1,650%. And for 2010, specialty contributed almost half of our pro forma operating income. The combination of these three strategic platforms makes us a premier provider of specialized polymer materials, services, and solutions in a diverse global customer base. We are generally number one or number two in markets where we participate. And in 2010, we reported total sales of $2.6 billion, 27% increase over 2009 levels. The geographic diversity of our sales is improving through our strong and growing global organization. Our incremental investment is focused primarily in Asia, India, South America, and Eastern Europe. These are the fastest growing markets, and it only makes sense for us to invest incremental resources in those regions. International sales in 2010 approached 40% of our consolidated revenue, and our specialty sales platform, nearly 2/3 of the business was generated outside the U.S. As you can see from this pie chart, we serve a diverse array of end markets, but we're increasingly focused on more attractive growth markets, such as healthcare and consumer, that are less cyclical than our historical markets. And these are targeted areas of investment and growth for PolyOne. With improved upstream marketing capabilities, I had the privilege of talking with one of the marketing classes earlier today. We've invested a lot in marketing, and we're uncovering additional niches where we can target technology developments and other differentiated materials that drive things like metal to plastic conversion and eco-friendly solutions. Our strategic plans have identified more than $30 billion worth of potential. That's a lot of market potential. So with this in mind and confident about our future, in the second half of 2010, we were among the first industrialized firms to begin hiring again. Examining each of these three business platforms, specialty is at the core of our transformation, and it is the engine that's powering our earnings growth. It's comprised of our specialty color, additives, and inks business and our specialty engineered materials business segments. And sales in 2010 were $1.1 billion. The specialty platform is a primary focus of growth, investment, and innovation. And as mentioned, it's our most global platform, with 65% of our revenue outside the U.S. It's also, by the way, our most profitable business. Next is our PolyOne distribution business, which we call POD. With sales of over $900 million last year, POD became the leader in our marketplace, representing over 20 leading polymer suppliers, including BASF, Dow, and DuPont. POD offers unbiased solutions to over 5,000 North American customers. The execution of our strategy throughout the past 4 years plus has further diversified this end market exposure of the distribution business that we have at PolyOne. And this is evidenced by healthcare, which is now 18% of 2010 sales. Well, let me turn now to our Performance Products and Solutions platform, and that serves some of our most challenging and difficult markets, such as U.S. housing, automotive, appliance, and wire and cable. Now, you all know that, read the news and you hear what's going on in the U.S. housing market. That's where they make their bread and butter and traditionally have. With 2010 sales of nearly $800 million, this North American business faced these great challenges and extremely steep demand declines in 2008 and 2009. And it remained at trough levels in 2010. But despite those conditions, last year this business reported record-setting profitability of 7% return on sales. Because they permanently reduced the cost structure of the business, they drove innovation, and they improved our commercial discipline within the segment. I think that's really remarkable what that management team has done there, because we used to have a break-even point that you had to build 1.2 million houses for that business to break even. And last year in the U.S., there were less than 600,000 housing starts, and they had a very, very profitable business. The new Poly One has greater sustainable earnings growth potential than we've ever had in our history. And our number one priority is profitable growth. Our growth strategy is focused on the following elements. First of all, innovation to differentiate our offerings through the introduction of new high value-added solutions and services. We place a lot of value on innovation at Poly One. Second is expansion into more attractive, less cyclical, high-growth end markets. I mentioned healthcare, also consumer and electronics, and emerging markets in regions such as Asia and South America. Third element is investing in sales, marketing, and technical resources to drive this specialization strategy. And in the second half of 2010 alone, we invested in 87 incremental commercial resources, all focused on driving sales growth. Fourth and finally, executing Lean Six Sigma throughout the company to improve quality, efficiency, and profitability. And today, our Lean Six Sigma trained associates represent more than 28% of the total global employee base at Poly One, and their ranks are growing. And we'll have more than a third of the people educated and trained in LSS by the end of this year. The earnings improvement across our three strategic platforms is the result of commercial excellence and innovation initiatives. And these are points we think of substantial competitive differentiation for Poly One. We have invested heavily over the last 4 years in training our commercial resources. And we're getting them to move away from selling on volume and price and moving towards selling value. We've also grown our pipeline of new products and services at Poly One through the use of a proprietary tool unique in our industry, and it is quite distinct. We illustrate to customers how Poly One services and products can help eliminate or minimize scrap or reduce total cost of production or increase their profits, things that are really meaningful and meaty to our customers. We also launched a cross-selling initiative in which sellers from our different segments are working together to identify and seize opportunities to provide a more complete bundle of services and solutions to our customers. Now, commercial excellence initiatives are most effective when they're packaged with innovative new products that respond to what we call the voice of the customer. We work directly with our customers and with prospects to develop the appropriate polymer formulation to meet specific end-use applications. We leverage our global research and developmental capabilities to continually evolve our product portfolio and introduce new innovations that are responsive to customer and market demands. Through what we call our Vitality Index, we track the percentage of specialty platform sales derived from products introduced in the last 5 years. So these are our newer products, the newer launches. We achieved a Vitality Index of nearly 40% in 2010, which is more than double our rate just 4 years ago in 2006. And it's a best-in-class performance if you benchmark, and we do all the time, and it's played an essential role in expanding the profitability of our specialty platform. And as this chart indicates, our specialty platform gross margins have expanded every year since 2006. You know, Poly One possesses an incredible amount of intellectual capital. We have unparalleled polymer formulating capabilities, compounding expertise, and this gives us a distinct competitive advantage as we continue to introduce new innovative products that meet our customers' needs. We continue to align our resources, our specialized offerings, and geographic footprint not only to respond to the customer needs, but also to redirect our efforts and focus on high-growth regions and markets. Our success in healthcare and sustainable solutions, I think, are two great examples of this market focus. In healthcare, we're devoting resources and growing rapidly. We now have 52 dedicated Poly One employees focused solely on healthcare. In 2010, annual sales to this market grew to $220 million, making it one of our fastest-growing markets. And to address the increasing consumer demand for environmentally friendly materials and applications, we created our Sustainable Solutions portfolio. Examples of sustainable or solutions in this portfolio include technology that's specifically crafted and dedicated for solar panels or wind turbines. We developed biopolymers that incorporate sustainable materials, everything from corn husk to sugarcane to sawdust that gets blown into our formulations and becomes an end product that looks like a plastic pellet. Sales of our biopolymer materials grew 55% in 2010, and these applications cover a wide range of end markets. They have terrific growth prospects. We've made a sustainability promise to all of our customers, pledging to help them meet their own sustainability goals. And we also employ those same practices at Poly One to reduce our carbon footprint. We're very proud of that. Similar to our success in the healthcare market and sustainable solutions markets, geographic expansion has been another tool that we've used, and we've had excellent success in moving into more attractive markets around the world and chasing where the business is going, or sometimes getting there in advance. We have 7 manufacturing facilities in Asia. We have a very strong foothold there, and we're well positioned to participate in the above-average economic growth of that region. And with our recent acquisition of 2 Brazilian companies, we now have color master batch, engineered materials, and distribution capabilities to serve the rapidly expanding South American market, growing probably 8 to 10% a year on its own, and will grow faster than that rate down there. Another key to the success of our 4-pillar strategy has been our focus on Lean Six Sigma. At the beginning of 2010, we were awarded the Best Startup Program for Lean Six Sigma deployment by the International Quality and Productivity Center. And this placed Poly One among some great company, the likes of Motorola and ING and Cintas, Xerox, Staples, Allstate Insurance, and Ecolab. We were recognized as #1 in this category with over 400 entrants. I think the results of the cultural adaptation toward continuous improvement through LSS really speak for themselves, and they include such things as record profits or profitability in each of our 3 business platforms, dramatic improvements in working capital. This is one where you want the graph to go down to 9.6% of sales. Our peers run about 20%, so less than half of our capital tied up relative to the peers. And best-in-class on-time delivery, despite reductions in inventories and changes in customer order patterns. Thanks to the working capital improvements and other progress that were made possible by LSS, as well as our successful debt refinancing efforts completed in the 3rd quarter of 2010, we have the best balance sheet in Poly One's history. We ended the year with $378 million in cash, $506 million in available liquidity, and limited debt maturities between now and 2010. So we certainly have ample cash to support our operating needs and fund a variety of M&A activities, which is the primary use of cash for now. You know, at Poly One, we don't just talk about our financial targets, we deliver on them. And in 2007, we established and announced publicly our very aggressive performance objectives to be achieved by 2012. And I have to tell you, at that time, every analyst doubted we could deliver. And I'd say they were beyond skeptical. They were downright cynical about our ability to deliver. But I'm pleased to say we're on a great trajectory. We're ahead of schedule, and we're going to achieve every one of those ambitious targets, as you can see where our progress in this slide illustrates. You know, when you establish targets like that, make them public, and you deliver on those commitments, it does wonders for the internal morale and the enthusiasm of our employees, as well as builds confidence and credibility between management and other external stakeholders. It's risky to do this, but if you have the confidence and the willingness to drive cultural change, it can be very, very powerful, and it has been for us. While we fully expect to reach all of our 2012 goals, this is not the end of the goal-setting process. In fact, earlier this year, our targeted specialty mix of earnings was formally increased to a new target of greater than 60% by 2014. And because our aggressive goals have driven unprecedented progress, later this year, we're going to set goals for 2015. We're going to make them public, and we'll continue to drive improvement in all aspects of our business. So that's essentially the story of our transformation to the new Poly One, and as the evidence clearly demonstrates, our strategy of specialization, globalization, operational and commercial excellence is working. Our employees understand it. They buy into it. Our leaders execute on it, and our entire organization is guided by it. And as a result, we're delivering record-setting profits across all 3 of our platforms and delivering on our #1 priority, which is, as I mentioned earlier, profitable growth. Specialization is the engine driving our growth, and it took us from being known simply as a company that supplies materials for products just like other companies to being a company that makes materials that strengthen our customers' businesses, makes people's lives better. We've made incredible progress toward the transformation, but I'll tell you, we're very far from finished. We have a long way to go. Our talented management team successfully drove the cultural change. They drove this transformation. They led it. They made it happen. And now they're delivering further earnings expansion and value to our shareholders. There are more reasons to expect good news from PolyOne in the future. Our specialty engine is just getting revved up. It is nowhere near running out of steam, and it's going to continue to power our growth. Housing and auto will eventually recover, and when they rebound, PolyOne will be there with our improved efficiency and our lower operating costs to capitalize on the upswing. And lastly, our balance sheet strength provides the flexibility that we need to seize acquisition opportunities that will help us expand into these attractive markets I identified for you earlier. You can see from this 2-year stock chart how investors have responded to our transformation, and it's been very, very rewarding for those who believed and invested in the story. All this was made possible by the people of PolyOne, and I am extremely grateful for their commitment to faithfully execute our strategy, even during the most challenging economic times in my lifetime. Still, the turnaround story is only in the beginning for us. We've made a significant leap forward, but our potential is limitless, and our future is extremely bright. So with that as an overview of our transformation, that concludes my prepared and formal remarks, and I appreciate your attention. And now it's time for some fun. We'll have some dialogue, and I'd like to open it up for questions and comments. Thank you. You know, no one ever wants to ask the first question, so who would like to start with the second question? Yes, sir.
With respect to specialty, thank you. With respect to specialty, how important do you link healthcare to the specialty product base, and do you look at healthcare in general as a large source of your growth going forward?
Yeah, great question. Healthcare is very important to the growth of the entire company. It's increasingly important to specialty. And yes, indeed, that's why we've invested so heavily in it. And there are a lot of reasons for it. I mean, you look at the healthcare industry, we as a society, not only in this country, but as nations around the world develop and mature, healthcare is becoming increasingly important and necessary. Longer lifespans mean more use. There is some control, there's some intervention, but clearly it's a growth market for everyone. They pay their bills on time, they grow, they're not credit risks. Certainly, when you get into a hospital, they're going to take very good care to be sure they're dealing with a quality company. They're not going to save a penny a pound or 2 cents a pound on a product and risk a lifeline to a patient. So if it's a precision chemical pump that's producing exactly the right amount of a drug to a patient, they do not want to take a risk. And we do better in these more critical applications, and that's just all what healthcare is all about. So it's an important market to every aspect of PolyOne's business. It's growing rapidly. I'm glad we're all over it, and you can count on more success in healthcare from us. Thank you for the question. Were you asking that as a student or a shareholder? I met this gentleman earlier, and he's also a shareholder, so he seemed to have bought at the right time. Yeah. Next.
You've had a wonderful strategy, and the stock price shows that, clearly a successful strategy. But in transforming a company like you did, you must have faced a few challenges, both internal and external, because changing the culture of a company and how you transform it has got to be challenging. So tell us something about the challenges you faced and how you overcame those.
Thank you. It's a great question. I think it's often underestimated how difficult it is to change culture. You can change a strategy, but if you don't get the culture to move along with it, you won't execute on it. And I would say several things. First of all, we had a catalyst for change that was beyond a new CEO. We had a company that had not done well, had not prospered. We had employees who cared a lot about the company and were frustrated. They hadn't seen their stock options go up in value. They hadn't received raises in some cases for some period of time. They didn't feel really good about where the company was going. So they very eagerly embraced a leadership change that along with it gave them some hope. And so that was a huge help. I think next was getting the right management team in place. Leaders who had successful track records, great pedigrees from companies like GE and 3M and Nalco and Ecolab, companies where success is part of the culture. And they could quickly assess talent, make adjustments where they needed to, but also lead and drive the change. So I think those were two important ingredients in the movement of the culture, which has resulted in I think, the transformation itself. And I do appreciate the question because it's a soft issue, but without it, you won't get there. There's just no way you're going to get people to go that direction if you can't get them behind the cause and buy in. We also spent a lot of time communicating repeatedly, speeches over and over and over again, town hall meetings, discussions, conversations, communications, walking the talk and setting the right example. And I think the last thing that I would add to that is that we had an early win. We picked customer delivery. We did customer surveys that said, what's important to you? And number one, believe it or not, at that point in our evolution was delivery, on-time delivery. I learned this in my first month at Poly 1. And we were satisfied because we were at 81% equal to the competition. Well, I felt it was an opportunity to differentiate. So we established a goal of 95% on-time delivery, world-class in our industry. This is when the customer asks for it, not when we tell them we can get it there. So it's a very stringent metric. And we got to win. We put the right people on it. We made it a priority. So people begin to feel good about themselves and gives them confidence. So I think in hindsight, it was sort of one of the things early on that really helped our people buy into signing up for something. Thank you for the question.
There's been a lot of talk about Northeast Ohio becoming sort of a cluster for polymers, for healthcare, and for advanced energy. Those are three areas that you talked about. Can you describe your thoughts about the cluster theory, and whether you put a lot of stock in Northeast Ohio's future as a cluster or hub center in those areas?
Yeah, certainly. I believe that we're in a great position to capitalize on all three of those. I think we have to be careful about how we go about it, and we have to build somewhat slowly, but we have to get moving. I think from Poly 1's perspective, we would certainly benefit not so much from local economic expansion, because we're a global company, and our sales are primarily outside this state and outside this country, but from the attraction and retention of talent to this area. So I think we have a lot to offer, by the way. I have lived around the world. I've lived in Cleveland now for about the last 4 years. And I think that we underestimate our abilities and what our capabilities are in Cleveland. I was talking with some people earlier today from the staff, and that question came up, what do you think? And my answer is, we have a lot more to offer than we ever believe in. So we have a little bit of a chip on our shoulder that we have to overcome. I think we can do really well, and medical might be the biggest underpinning of it, because the reputation that Cleveland Clinic and University Hospitals have around the world, it's global, especially Cleveland Clinic on a global sense. But in a local sense, both are outstanding organizations and do a lot for the community beyond just what they contribute in terms of healthcare. There's a question over here. We'll get you a microphone.
I was related to delivery time, we kind of sidetracked.
Okay, no problem.
But with respect to acquisitions, do you have a priority for any division, or what type of technology or suppliers? I think that's the stated policy.
Yeah, we do have a prioritization process, and it clearly is for the specialty business. And certainly what we're looking at first and foremost are where we have a technology gap, where someone has something that we don't have. And I'll give you an example. 3 years ago, we bought a company called GLS, about $150 million organization. It was a big step for us at the time. And this is the company that makes these TPs, these soft touch products that you find, I alluded to, on a razor or the end of a pen, but far more scientific than that. A lot of it's used in the medical space. They're the best in the business at what they do. They're really wired into their customers, and I loved their culture at the time, and they were very profitable. Their problem was their customers were globalizing, and Gillette was saying to GLS, you know, we love you guys. We want you around the world. We don't want you to make things, the plant's in McHenry, Illinois, outside Chicago. So we don't want you to make things in McHenry, Illinois, and put them on a barge and have to wait 6 weeks or 8 weeks or 10 weeks for them to get here, and worry about piracy or moisture content, etc. So you're going to have to do something about this. You're going to have to put a plant in Poland, and you're going to have to put a plant in South America, and you're going to have to invest in Asia. You know, this was a small private company, and they didn't have the expertise, the know-how, nor the resources to do this. So the owner decided that their only option was to sell the company or stop growing, and knowing that he was smart enough to realize that if they stopped taking care of Gillette, other places, they were eventually going to lose that business. And so Poly One came in and competed hard to win that acquisition, and we leveraged it. So we had plants already and legal entities in Europe and in Asia, and we allowed that organization to grow. And it's interesting because it's been part of the family for 3 years now, and their income, which was very good when we bought them, has tripled in 3 years. And they will tell you that we've helped make them better, and I will tell you they've helped make Poly One a lot better. So that's an example of buying some, had some unique technology, a really great business model that we could leverage globally. So we'll look for opportunities where some business, some technology that's only serving a region or a country that we can then extend around the globe. That's the advantage of our global reach. It is clearly a competitive advantage for us. Did I answer your question? Okay.
What year did you guys implement Lean Six Sigma, and from the time you implemented it, how long did it take before you started seeing change in that?
Yeah, we were late adopters. I mean, you go back to this, and some of you probably studied this. The Lean Six Sigma goes back. I mean, a lot of people started, GE started, what, late 90s at the latest. So we were very late to the party. That was the bad news. The good news is, when you do a Lean Six Sigma program well, there is a huge prize for you. And we hadn't collected on it yet. So we had that opportunity. We really embarked about 2.5 years ago heavily on Lean Six Sigma. Before I arrived at the company, there was a false start. We launched, but we made it optional, and very few signed up. Only one business subscribed. So I would say the answer to your question is 2.5 years ago. Our goal initially, this costs you some money to invest in this. In the startup year, it costs you $4 or $5 million. And it's hard to take a hit like that in a public company. But we had a goal of breaking even the first year. In other words, saving what we spent on consultants and training and travel, et cetera, and actually did better than that. And now our results are quite overwhelming. I mean, $130 million, and Joe, correct me if I'm wrong, plus in working capital improvements, substantial contributions to our earnings increase. But here's what's nice about Lean Six Sigma done right. You can also take the same concepts, and now we apply it, we use Salesforce as our customer relationship management system. And we apply those same concepts to how we go to the customer. It isn't, the mindset of Lean Six Sigma done right is continuous improvement in everything, not just in spending less in manufacturing and eliminating waste. And I think that's the beauty of what we do. We had the advantage of seeing the winnings and the failures of previous adopters, and so we could fast track this thing. So pretty quick to get, most firms that embarked on this, if you break even year one, you've done well. Usually it's a sink for the first year. And the second is about break even, and the third you start to have it produce some money. So we had some advantages that allowed us to capture wins early. Thank you.
What impact, if any, are you expecting the catastrophe in Japan to have on your business?
Yeah, a great question. We first of all, we have a finite number of employees in Japan, but they and their families were not harmed in any way, so that was fortunate for us. It's still devastating, and we don't like to see anything like this. None of us in this room do. I think from our standpoint, the impact is going to be minimal, but there will be some impact, and I'll explain to you what I mean by that. You just heard Chrysler Jeep announced that they're not going to pay overtime in their manufacturing plants for a while. And the reason they're not doing that is they can't get component parts to assemble their vehicles from certain suppliers that are Japanese. Well, we sell a lot of products to Jeep Chrysler and to Toyota and to all the big three in North America. And so if production slows down, not due to demand by customer, but due to supply availability, certainly it will impact our business adversely. Good news for us, it's a small percentage of our business, and we've got a lot of other very fast-growing markets. But I don't think that the business community understands yet the full impact of this catastrophe in Japan. So we've assessed it, and we think it's minimal for us, but there are some that are going to feel, I think, a lot of pain from it, beyond the human pain.
As a Bowler student, we're asked this question a lot. Where do you see yourself in the next 3 years, taking into mind the economic environment? Is there a region of the world where you really see Poly 1 expanding and growing?
You know, I would say, I can't say there is a region of the world, but we're going to grow in all regions of the world because that's the nature of our business and our mindset, our mentality. But we'll see accelerated growth in Asia. I mean, I just got back last week from a week in China and Hong Kong. And it is amazing, and some of you probably visited there recently. It's amazing to see what's going on over there. And the population, the standard of living is improving. People are buying and consuming things like never before. India is another place where we built a facility that has great expansion and growth opportunities. And the key is to be there in the right position and capture the market when it grows. We're very, very bullish on South America. And we're adding the Olympics and the World Cup to additional incremental growth. That creates a lot of excitement, exposure, and investment. So we're really excited about the opportunities in South America. And then you've got Eastern Europe, which I'd say of those four, it's probably a little bit softer than the other three, just because of bureaucracy and political issues, et cetera, and risk in some ways. But we think all the regions of the world will keep growing. Europe a little slower, North America a little slower. But I will tell you this, I told you earlier we have $30 billion worth of potential. So to me, there's no excuse not to grow in North America or Europe or anywhere else. There's plenty of business that we don't have out there. We'll see places where the actual growth rate of the plastics consumption business might be 10% or 12% versus globally maybe 5%. But even when it's 5, we ought to grow 8 or 10. I don't know if I answered your question or not. Okay. She's coming with the mic, so we get everybody the benefit of hearing the question.
Hi. With a far-flung business like yours, what types of things do you do in the distribution business? Because you're saying that you pride yourself in on-time delivery and distribution innovations. How do you keep this thing glued together with distribution?
You know, distribution has a lot of important elements of it when it comes to Poly 1. First of all, it's a great hook with customers. They have 5,000 in North America alone, so we can sell Poly 1 products through that channel as well. So 80% of what they sell are other products, Dow, DuPont, the likes you saw on the slide, but 20% are Poly 1 products. So it's important from that standpoint. I like controlling the customer. I like to have our people at the customer's doorstep, not depending on somebody else to distribute for us. So that's, I think, probably the most important aspect of it. The other piece of distribution you have to remember is managing the supplier relationships is extremely important. There's one supplier for DuPont, and it's us. If we don't treat that relationship right, they'll find somebody else who will. There are 2 suppliers for Dow, and we're one of them. There used to be 3 or 4. It's down to 2 now. So we take very good care, and it's a business where you got to treat your customers well as always, but you have to also take care of your suppliers. And you can't have antagonistic relationships with their competitors. You have to be unbiased in your approach, so you're really looking at what's mattering the most to the customer. And you're giving them a solution that really makes the most sense for them, and that these suppliers understand you're playing the game with great integrity. So it's a great business for us. And then, of course, speed and responsiveness. I mean, some of these molders are not real big operations, and they can't afford to hold lots of money in inventory. So when they call with an order, which we love, you got to get out there fast. You got to get the stuff packaged right, in the truck, ship it, deliver it on time. That's why they buy from you. I guess the last piece of it is the relationship with that customer. They have to trust you. In order to trust our company, they have to trust our local representative. That relationship between that seller and the customer, decision makers and influencers, is vital in distribution. Did I address your question? Okay. How are we doing on time? Are we? How about one more question if anybody wants one? If not, I may be the only thing keeping us between some snacks and hors d'oeuvres and some socializing, and I wouldn't want to be doing that. Well, I appreciated the opportunity. I also appreciated very much your questions. I want to thank you for your time and your attention, and I look forward to meeting you during the reception. Thank you very much.
Thank you, Stephen, for being our 52nd Mellen Series speaker. And presentation of the strategy and transformation that you've brought to Poly One Corporation, I think, is impressive. Special thanks also for your participation in the Mellen Series. It's as good as it is because of the people that we have here and the outstanding jobs they do. So we thank you very much for being here. Lila Carella has a tokens of our appreciation to give you at this time. Thank you, Layla. Before we start the reception, a few brief comments on those that have helped make all this possible. For aiding us at Poly One Corporation in making this presentation possible, special thanks go to Amanda Marco, Director of Corporate Communications, also to Kathy Cornelius, who was just retired as Executive Assistant for Mr. Newlin, and Joanne Turnbell, who's Executive Assistant currently as an acting position for Mr. Newlin. At John Carroll, special thanks go to Kat Stover, my assistant, who makes all the arrangements and necessary for the program to be successful, and without her, I wouldn't be able to do it. And to the student volunteers who are here today to help us. We look forward to seeing you all at JCU for next Mellen Series presentation on Thursday, October 27th. Mr. Glenn W. Wenwick, President and Chief Executive Officer of Progressive Corporation, will be our 53rd Mellen Series speaker this fall. At this point, the reception now continues to 7 o'clock. Stephen Newlin will be available during the reception if you'd like to talk with him. Thank you very much for coming.